Welcome to our comprehensive guide on taxation basics for businesses. Whether you're just starting out or looking to refresh your knowledge, understanding taxes is crucial for every business owner. In this video, we'll break down the essentials from the types of taxes you might encounter to practical tips for staying compliant. Let's start by exploring why taxes matter and how they impact your business operation. By the end of this journey, you'll have a clearer picture of what's expected and how to manage your tax responsibilities with confidence. Taxes are more than just a legal requirement, they're a fundamental part of running a business. Paying taxes funds public services, infrastructure, and helps maintain a fair marketplace. For businesses, understanding tax obligations can prevent costly mistakes and legal issues. It also builds credibility with clients and partners. In this scene, we'll discuss the broader role taxes play in society and why staying compliant is essential for long-term success. Businesses face several types of taxes, each with its own rules and rates. The most common include income tax, sales tax, payroll tax, and property tax. Income tax is based on your profit, while sales tax applies to goods and services sold. Payroll tax covers employee wages, and property tax is for owned assets. Knowing which taxes apply to your business is the first step toward compliance. Let's break down each type and see how they might affect your operation. Income tax is a key obligation for most businesses. It's calculated on the profits your business earns after deducting allowable expenses. The rate and filing requirements can vary depending on your business structure, such as sole proprietorship, partnership, or corporation. Understanding how to calculate and report income tax is vital to avoid penalties and ensure your business remains in good standing with tax authorities. Sales tax is charged on the sale of goods and some services. As a business owner, you're responsible for collecting this tax from customers and remitting it to the government. The rules for sales tax can differ by location and industry, so it's important to check local regulations. Properly managing sales tax helps you avoid audits and ensures your business stays compliant. If you have employees, payroll taxes are a must-know. These taxes include Social Security, Medicare, and unemployment taxes. As an employer, you're responsible for withholding the correct amounts from employee wages and making timely payments to tax authorities. Staying on top of payroll taxes helps you avoid fines and keeps your workforce happy and secure. Property tax applies if your business owns real estate or other taxable assets. The amount is usually based on the value of your property and is paid to local authorities. Keeping accurate records of your assets and understanding local property tax rates can help you budget effectively and avoid surprises during tax season. Your business structure, whether it's a sole proprietorship, partnership, LLC, or corporation, affects your tax obligations. Each structure has its own tax rates, filing requirements, and liability implications. Choosing the right structure can optimize your tax situation and protect your personal assets. Let's look at how different structures impact your taxes. Sole proprietorship is the simplest business structure. Taxes are reported on your personal tax return and profits are taxed as personal income. While this makes filing straightforward, it also means you're personally liable for any business debts or tax issues. Understanding these implications helps you decide if this structure is right for you. In a partnership, profits and losses are passed through to each partner's personal tax return. The partnership itself files an informational return but doesn't pay income tax directly. Each partner is responsible for their share of taxes, making clear agreements and accurate records essential for smooth operations. Limited Liability Company (LLC) offers flexibility in taxation. By default, single-member LLCs are taxed like sole proprietorships, while multi-member LLCs are taxed like partnerships. However, LLCs can also elect to be taxed as corporations. This flexibility allows you to choose the most beneficial tax treatment for your situation. Corporations are separate legal entities and pay taxes on their profits. Owners or shareholders may also pay taxes on dividends, leading to double taxation. However, corporations can access more deductions and benefits. Understanding the pros and cons of corporate taxation is key for larger businesses or those seeking investment. Before you can pay taxes, your business must register with the appropriate tax authorities. This usually involves obtaining a tax identification number, such as an EIN in the U.S. Registration ensures you're recognized as a legitimate business and can file returns and make payments properly. Accurate record keeping is the foundation of good tax management. Keep detailed records of income, expenses, payroll, and assets. This not only makes tax filing easier but also provides valuable insights into your business's financial health. Good records can protect you during audits and help you claim all eligible deductions. Tax deductions reduce your taxable income, lowering the amount you owe. Common deductions include business expenses like rent, utilities, supplies, and salaries. Knowing what you can deduct helps you maximize savings and stay compliant. Always keep receipts and documentation for every deduction you claim. Filing your tax return is an annual requirement for most businesses. The process involves reporting your income, expenses, and calculating the taxes owed. Deadlines and forms vary by business type and location, so it's important to stay organized and file on time to avoid penalties. Many businesses must make estimated tax payments throughout the year, not just at tax time. These payments cover your expected tax liability and help you avoid a large bill at year-end. Calculating and paying estimated taxes on time keeps your business on track and prevents interest or penalties. Staying compliant with sales tax means collecting the correct amount, filing returns, and remitting payments on time. Sales tax rules can change, so it's important to stay updated on regulations in your area. Using accounting software or consulting a tax professional can help you manage compliance efficiently. Payroll tax compliance involves more than just withholding taxes. You must also file payroll tax returns, issue W-2s or equivalent forms, and keep accurate employee records. Mistakes can lead to fines or unhappy employees, so it's crucial to stay organized and meet all requirements. An audit can be stressful, but good preparation makes it manageable. Audits review your tax filings and records to ensure accuracy. Keeping organized records and responding promptly to auditor requests can help the process go smoothly. Remember, audits are a normal part of business and not necessarily a sign of wrongdoing. Missing tax deadlines can result in penalties and interest charges. Mark important dates on your calendar, such as filing deadlines for income, sales, and payroll taxes. Setting reminders and using accounting tools can help you stay on top of your obligations and avoid unnecessary costs. Tax laws can be complex, and working with a qualified accountant or tax advisor can save you time and money. Professionals can help you navigate regulations, maximize deductions, and ensure compliance. Building a relationship with a trusted advisor is a smart move for any business. Effective tax planning can reduce your tax burden and improve cash flow. Strategies include timing income and expenses, taking advantage of credits, and choosing the right business structure. Regularly reviewing your tax plan with a professional helps you adapt to changes and make informed decisions. Even experienced business owners can make tax mistakes. Common errors include missing deductions, filing late, or misclassifying workers. Being aware of these pitfalls and double-checking your filings can save you from costly penalties and keep your business running smoothly. Tax credits directly reduce the amount of tax you owe. Businesses may qualify for credits related to hearing, energy efficiency, research, and more. Understanding available credits and how to claim them can lead to significant savings. Always check eligibility and keep supporting documentation. In addition to federal taxes, businesses may owe state and local taxes. These can include income, sales, and property taxes, each with its own rules. Staying informed about your state and local obligations ensures you remain compliant and avoid unexpected bills. If your business operates internationally, you may face additional tax obligations. These can include foreign income reporting, value-added tax, VAT, and transfer pricing rules. Consulting with an international tax expert can help you navigate these complexities and avoid double taxation. Tax laws and regulations change frequently. Staying informed through reliable sources such as government websites or professional advisors helps you adapt quickly and avoid compliance issues. Make it a habit to review updates regularly and adjust your processes as needed. Modern accounting software and digital tools can simplify tax management. These tools help track income, expenses, and deadlines, reducing manual errors and saving time. Investing in the right technology can streamline your tax processes and give you peace of mind. We've covered the essential basics of business taxation, from understanding different tax types to practical tips for compliance. Remember, staying organized, seeking professional advice, and using digital tools can make tax management much easier. Take the next step by reviewing your current tax practices and making improvements where needed. With the right approach, you'll keep your business on solid financial ground.